seconds to actually come in and read the disclosure. I'm going to do a midday call today just to chat a little bit about what's happening and what's been happening, so this way everyone could, figure out and reevaluate what they're doing. Hopefully most people reevaluated what they were doing last week, because the time to have done that was definitely Thursday and Friday, which we're going to get into. First, I just want to make sure that I see what's it called, we're looking for a link, so this way everyone can watch it live, so this way you don't have to watch it again, or hold on, here we go, let's see, keep taking a look there, take a look. Catherine, is it up?
It is.
Okay, hold on. There it is. Okay, come watch. I'll just say it so you guys can hear it as it happening. SPX, Amazon, I went over Apple, and more. Okay. All right, guys. So now you read the disclosure. Let's go to me. Hi, my name is Scott Rutledge, Chief Strategic Officer of T3Live.com. Welcome to today's midday call. Every day I do a morning call that goes out around 8:30, and I always do a recap. Every now and then I'll do a midday call when things are happening. Also, I'll do it on the public one, a public midday, just to get more people involved and hopefully out of harm's way or into some opportunistic situations. Last week, I was away. I was at Miami Beach with the family, and I was trying to manage a few of my leftover positions ever since we put on Portfolio Approach back from October. And then on Thursday, if you recall, I tweeted, I'm like, guys, this is loose and wide. This type of action gets me cautious. And then I think I did a tweet saying, hey, this is the time to play very strong defense, not aggressive offense. And then on Friday, most of the momentum levels that I trade, that I try and use as a barometer for the market, all broke momentum levels. So if momentum levels break, what happens? Momentum leaves the market. So if you're a momentum trader like me, or an active trader that likes to live above the 8 and 21-day moving average, those are your signals to reduce risk, to get rid of a certain amount of positions, maybe put on more of a hedge, maybe buy some VIX calls, all the things to get yourself more flexible as potentially things change. If you look here at the chart of the S&P Cash, which is right here, every down move we had pretty much since the start of this active sequence from 29.62 happened when we broke the 8-day. And if you would have reduced on those days, you weren't in pain on a day like today, because if you remember right here, this was when this active sequence was put under pressure, and we broke below the 8-day moving average on that day, this wide range candle. So if on that day you said, I am going to use Red Dog's momentum rules and get out of the way, you didn't get caught in a pretty sizable down move, okay, right? And if you sold in here, you had the opportunity to buy versus a reactionary low or a bottom tail or whatnot before we bounced up, digested, and went again. Look at this candle. This candle also was a wide range candle that basically took out this ascending channel and took out this upper flag. And here too, if you got out on this day, which looked different than a lot of other days, you weren't caught in the down move here. So now fast forward to where we were last week, where you had this loose and wide range where we're down a lot, where everyone's like, oh, what happened? Everyone's making excuses, fat finger, this, that, whatever. Russia's mobilizing against Turkey. Anyway, that was loose and wide. That was your first say, hey, let me be a little careful here. I think I got stopped out of some positions. Remember I tweeted, I'm like, hey, got stopped out of a few momentum longs from the road, it happens. And then on this day, when we gapped down and stayed below the 8-day, okay, that was my signal to keep my hedge on, keep my VIX calls on, and go from like 15 longs, which I was down to 5 or 6 coming in, and 2 of them are just a swing trade concept play from December. So anyway, I did not get caught in this. Okay, actually, I'm up money today. Believe it or not, Red Dog, oh, you're a permeable. How are you up money, net money? Like, A, I was up money because I had a nice size hedge on, and B, I mapped out levels, and I had bids in with the VTF, in the first few minutes of the day. Not guesses, but levels that I figured, hey, let me put these bids in just in case they whoosh them down, get them, and then take advantage of lower prices because I got out higher last week. So anyway, what do you know now? Let's talk for a second. This is what? This is 32.31. That is today's reactionary low. Is that going to be the low of the day or the low of the week? Hard to tell, guys. Okay, unless you have a little genie bar or whatever that is, lamp, it's hard to tell. All you know is you have now a really big gap here. Do we fill this gap or try and fill this gap in the next day or two? Okay, or do we stay down here, go sideways, and then this huge gap turns into a breakaway gap that basically says, hey, the bears are in control, for a long time to come. Okay, if you remember, again, going over tactics, on this big down day, there was a gap to fill also. So we filled it, okay, within 2-3 days, okay, right in here, if you remember, this gap was filled, okay, and then we came back down to the 50-day, and then we rallied again. So at this point, I do not know what's going to happen here, except for we have new points of reference. You have 32.31, which is above this 32.14 bigger support area. We're still below the 50-day, okay, and now we're below the 8 and 21 days. So what does Red Dog say? When we're below the 8-day, like we were last week, we reduce risk, and then if we're below the 8 and 21 day and stay below it, we take care. We just become tactical. And now if you all of a sudden stay below the 50-day with a big gap, chances are, then you got to start like moving things back and say, hey, where else can we go? Can we go to 31.54? Can we go to the 200-day? We could do all these things. If you even show, like, look how far this market has rallied in such a, since this is only since 2018. Okay, and this is all we are. Okay, where you have, Italy closing major events. You have China basically closed for business. Now there's cases in Iran. There's everything going on in South Korea. Most thought, hey, this is going to be a first quarter thing, and then everyone's going to play catch up in the second and third quarter. I think the reality of that's settling that maybe that's not the case. But anyway, let's not guess, and let's not guess is everyone worried about Bernie getting the Democratic ticket versus Bloomberg, who didn't do well at the debate. Either which way, all you know is this, is how can you maneuver your P&L, or how could you maneuver your life if you trade for a living, because this is your life here, guys. Okay, and at this point, we broke the momentum trend here. You can even draw this across. This now could be like a breakout failure. You had 2 days to adjust, and now it looks like we're ready to go down through the lows in the morning, which could get us to here, or maybe to here at some particular point. I don't know. All I know is that now you have a big gap that nobody bought. We didn't fill that gap. Lots of names didn't fill their gaps. Yes, we bought some things in the hole, for a trade, but that was surgically, with me and the VTF. So what did I buy surgically? So if you remember, I did a little video this morning, and I showed that I said, hey, Apple's below 302. There's a level between 290, 292.5. So what do I do as a strategic, sophisticated trader? Okay, I'm not really that sophisticated. I put bids in from 392.50 down to 390. It was just the 320. So I'm like, you know what? We get there fast. I could probably get a good trade off. Or I could buy it. I put a bid in Microsoft, and I put a bid in Amazon. Those were my three names, and I said, hey, if we're down 1,000 points on the open, they could probably be a better buy in the first 0 to 7 minutes than a sell. And listen, it was dangerous because we could have been down 2,000 points in the first 10-15 minutes, but we weren't. It worked. Okay, so if you look at Apple, okay, I outlined this section here. Okay, this was what? This was 292.75. So I'm like, hey, chances are I could probably buy 292.50 and I could trade around it, considering where it just broke. And no one was long. I wasn't long. Wait a minute, I don't know, maybe you were long, but look at this, guys. 8 and 21 day broke right here. That says get out of Apple. Unless you've been an investor and you don't look at it and you've been in for a decade, fine, that's different. But if you trade for a living and you trade for P&L, and that's how you put food on your table, when above the 8 and 21 day like we were since 260 all the way up to 327, now it's curling down. Now it's breaking below. Now, common sense wise too, besides being a technician, production in China, as well as some other places in Asia, as well as people not going out of their house to buy things. Someone's like, oh wait, but it's priced in. I'm like, it's priced in. I'm like, Apple's up 2 to 4% for the year, and had a huge year last year. It's not priced in any of this. It's priced in saying, hey, we're gonna have a hiccup in the first quarter, and then we're gonna make it up when nobody wants to get out of the way. And that was this. But now, anyway, you have a hole here. What do you know? It bounced. It went to the 50-day, which was good to know, and got rejected there. The 50-day is 304.78, so that's a new point of reference. You're gonna write that in. Um, we'll see if it gets above that in the sessions ahead to fill the gap. If it doesn't and stays below it for the next day or two, chances are it could still go lower. So I'm not saying I got lucky, but I got a little lucky this morning. I made my money by putting bids in from 392.50 down to 390.50. By 9:31, all of a sudden I had Apple, I had Microsoft, I had Amazon. I'm like, holy cow. And then by 9:33, they all bounced and I started selling some, holding some. And by 9:40 or 9:39, when I finally had a second to breathe, I'm like, okay, I sold 75% of those. That was great. Great because I guessed? No, great because these were levels and I know these stocks very well. Okay, Microsoft, I bought in here, okay, 165.5. I didn't get the bottom, but I figured, hey, this is where it broke out from. This is a decent spot. If you sold, I didn't update this chart because ever since the Red Dog reversal here, look at that. Red Dog reversal sell here, lower high, and then what did it do last week? It broke the 8-day moving average. This could have been your spot to sell it on Thursday, before Friday, before today. That's why we use the 8 and 21-day moving average to see whether or not it's a portfolio approach name for you or not. So now what do we have? Okay, now we got to readjust. Okay, it's off lows here. Not a heck of a lot. This is your new point of reference, 163.23. And now it just needs time. Now it's just a trade. Some guys, look, people like, how did people maybe make money today? There were two different ways, okay, which I'll show you. One was my way, which is not that easy. Okay, I put a bid in right around, what was it, 165? Yeah, this low here is 165.50. So I figured from here, and I remember I was shorting 190s that day. Holy cow, I'm a horrible short. But anyway, I figured I could do it. So if you go to the 1 minute chart, you have I talk about a reactionary low, which happened, and then I talked about the 15-minute reactionary high that some might look for an H sell setup. So those are two tactics when volatility is up: buying versus level, after you get a reactionary move, and then maybe after a bounce, looking for an H sell setup. So if you go to the 1 minute chart here of Microsoft, okay, it's kind of what it is. So this was your reactionary low. Okay, bounced up. Okay, so people say, what's the H sell setup? Well, here is kind of like the pole, and then it comes up, starts to roll down. So I would say, I tried this actually short here. I made a little bit, and then I got stopped out because I'm a bad short, and now it's heading lower. But anyway, I don't know, it just didn't look that easy for that. But once it, sorry. I'm trying to think, when was it really calculated? I guess this was your false little move up. Once it broke 173, you could have said I'm putting a stop in a 174, and it's not a whole heck of a lot lower. If you're looking at it now and saying, hey, I want to be long Microsoft, okay, I would say, if I'm not long Microsoft right now. I caught this easy move, which was lucky, but it was calculated, and there was risk there. That maybe now you'd say, okay, you want to be long Microsoft versus this low here. This low is 170.80, so you're giving yourself like 60 cents. But if it breaks that, there's a lot of room down to the morning lows. Okay, so that's why it's a hard trade right now. They flashed it all the way down, and if you're short, you can say, hey, I'm going to be short versus this spot. Or you could say this is a noisy, nothing to do trade, and just let it alone. And then tomorrow we'll see, does it get above this and fill the gap, or does it open up and you could buy it versus today's low tomorrow? Because right now it's just sitting in this kind of trend. But if you look relative strength wise, look at the spiders. What's the spiders doing? Spiders are already almost back to the lows, so there is at least a little relative strength in Amazon. Microsoft. So anyway, this is your low here. This breaks. You could see that moving the SPYs down to 321, 320.50. I have to head for Fox Business. I'm going to go to the gym and shave and get all pretty. I have no position in the spiders. I came in short the spiders. I covered 75% of my short pre-market, and then I covered the rest to see if I could buy it, but that didn't go to my area that I wanted it, which was 320.50. So now when I leave, maybe I'll put some bids in at like 320. 75 and 320 and a quarter, and then maybe 318.50. So because if it breaks this and we go from down 850 to down 1300, I feel like I could trade around that and buy that if I'm not on my desk. Otherwise, I'm not interested. Some might say I'm buying it versus here because this is the morning low, which is okay. But that's I guess that's that could be worth a look. And or some guys who shorted the bounce say, hey, I'm short, and this is your reactionary high after the bounce. It wasn't such a great bounce, and this is your out right up here. Well, it depends on how you want to play it. For me, it's not worth it for me to play. I'm not going to buy it because I don't need to get stopped out, and I already made my morning money actually pretty well. And look, see where Apple is. Okay, so Apple, it actually is well off those lows, so it is showing some relative strength. So I would say, hey, let me keep an eye on Microsoft and Apple. They both are in. Here's your first move. This was the move that I bought, and then I sold into this. I didn't get the highs, but I did well. And now, if this market's going to bounce, Apple probably has to, take out this and head back into the gap. If it's not going to bounce and the SPYs break the lows and this breaks this spot, there's a lot of room from here to down here. That's why, if you're going to be long this now, I would say, hey, which I don't think there's a real need to be long this now. This could be one stop area. This 296, or if you want to be tight, here. If we were in like a normal tape right now, and I was thinking, hey, I like this pattern, like if it was on top versus on the bottom, big move, consolidation, buy verse here, breaks above this, this flag type pattern, maybe we get more higher prices. But, Apple to me is still one of the more vulnerable names. I don't think it's just the first quarter that they're going to pre-announce revenues for. I think it's going to be for the year, if not more. So anyway, that's that. So this was, you had to be fast and buy in the hole. Then again, this was your 20-minute high. So if you shorted versus the 20-minute high somewhere around here, you haven't made much money. It's been choppy. And now this is your range, and this is where the lows of the day are. A lot different than the SPYs. I think it's going to be a hard time for the SPYs to break this, the lows of the day, if Apple holds this, and if Microsoft holds this. If Microsoft were to break this spot to head back to the lows, and if Apple were to break this spot and head back to the lows, I would think the SPYs, which are showing relative weakness versus that, will be another 3 to 4 points lower, and that means the Dow will be down over 1,000 plus points. These are just thoughts as I'm going through these charts as I'm leaving here in 10-15 minutes. I also caught Netflix. I had bids in at like 361.50 down to 356. Netflix is also showing a little relative strength. Not a whole heck of a lot. You go sideways here. This is the morning low. This actually gave you a decent trade. Put a morning low in, so I bought actually 361.50s. Once it consolidated, it actually gave you another push up into the 370s, and now it's it's a whole lot of nothing. It's lost some momentum. It's acting better than other names, and it's really not that compelling. If you wanted to be long it, say, hey, I'm going to be long this. You got to be long it. You could be long reverse, 365-ish, or you give it to the morning low, but that's a lot of room. That's another $5. I don't think you need to be in a rush. If you were going to short it, I would say be short verse here, or be short verse, if you want to give it real room, give it verse here. But to me, I'm not going to do that either. You go to the macro account of your chart of Netflix now, and it's you get a red dog reversal up here. I remember I'm like, I don't love that candle, but I'm giving it a little bit more room because I sold over 392s. Well, then the next day I also said, hey, I'm going to sell some at 388s to be safe because I like to be safe. And now it's good. Now, if you look at the chart, it's a little different. Okay, why is it a little different? Well, first of all, you're in a different market now, a market that probably lost momentum. That's going to be hard for things to break out and go. Okay, so here now, this was 386, 386, 385. It got above 385, went to as high as 393, and then broke below it. So that's a breakout failure. So that means if you break above a momentum level, and what happens if you don't hold that momentum? You get out. That's why you could have used 385 or 378. I sold some strength, and I used actually 378, which was better than 360 this morning. That's why I was able to buy it. Now what? Okay, this was your red dog reversal sell here. That was your high. I guess I would think if this is going to be good, and maybe try again at some particular point if the market does not fall apart, from down here, maybe it comes into here and then tries again at another point. We'll see. I still have a call spread on, which I'm probably going to lose all that money, but better than being caught in the stock. So, make it a little bit bigger now. Again, that's what a red dog reversal sell is, right? This is a red dog reversal sell, breaks above a prior high, comes back below it. Okay, This high here is what, 392.95. I remember selling 392s, which was nice, thank God. But I still held some, and I didn't sell it all up there. 392. Now we'll see. You know, does it hold here, and does it fill the gap tomorrow, or not? Does it stay below? So, granted, there's a lot of time left in the day, but my thought is, okay, we have a huge gap. We didn't have much of a rally off the lows. You had to be a surgeon with bids in to buy things in the first 5 minutes to really make any money long. And then it also wasn't an easy short. You know, you had a short verse of 15 or 20 minute high. And now what happens today? Do we rally at the end of the day, you know, and be down 650 points, or do we take out the low that I just showed you in the SPYs and the Apple and the Microsoft, break that level, and we close down 1,1300 points, which would probably be the healthiest. So then get another gap down and then see if it's easier to handle, more power. Amazon, I bought it 2007. I had a bid in the 2007, and I didn't put a bunch of bids in because I thought if it breaks 2000, I'm screwed. It's going to go into that gap. And now, you know, it's in, this was the zone. I had a zone on like 2000 to 2020. It's buyable. Why? Because I sold two 2170s, and most of my community sold when it broke the 8-day right here at 2124. So they had the chance to buy $100 less for a trade. And now, I don't know. This low here is 1995. It kind of played with 2000, so that's your new point of reference. And it's a different type of trade now. It's like gonna hopefully build above this, or if the market's that weak, it's gonna fill this. You know, but we'll see. We did really well in here, guys. I made a lot of money with my calls going into earnings and then playing it from here. It's selling it at 20. I remember I sold it at 2170. You guys were laughing because I didn't get 2185. I don't have to get the top. You know, the meat and potatoes could keep you fed. Anyway, you know what now? This is the macro pattern. I guess this doesn't mean as much, so let's get that out of the way for now as I try to rebuild this thing. But now, it's just really, looks like it's coming up a little bit now. Here's your 2000. Problem is, you know, is if it does get now below this and stay below this, it's a big gap down, you know, to be filled, 1918 and even lower. So we'll see. And does this actually turn into, you know, a breakout failure? So I guess you could draw this here too, where it already came below this and this, and look, and it broke up the elevated flag. So I don't know. Again, now today it seems like it's weaker than some of the others because it doesn't have a buyback the way Microsoft and Apple does. So it's only, you know, it's pretty lethargic at times. But here you have a hole in the chart now, right? We have a big gap down, wasn't able to fill it, saying like, hey, people aren't like, oh, look at Amazon, it's so on sale. You know, I didn't have it overnight, but I want it now. So will it negate this move? I don't know. We shall see. You know, will there be a trade tomorrow to buy it above today's high, which is 2039, to fill this gap? I don't know. These are all things that I'm thinking about for tomorrow, but we still are in today. But for now, we'll see what happens. Where's the SPYs again? Let's go to the one day. Kind of holding, still holding this bottom area. You know, guys that try and press, you know, they get very scared if it doesn't break, especially if they're on committed shorts. All right, so with all that said, those are some thoughts. I could probably go over 100 stocks, but I'm not going to. It's the midday call. I just want to go over some levels and some thoughts on the action. Let's go back to the S&P cash. Okay, same kind of thing. Big gap down. Just some would say this is a double bottom. Right, it could be. Here's your low. We just tested that low. Didn't have enough power to break. In order for it to really get going, it's going to have to get above this spot here. But again, it's not really, it's still time of day. It's only 12 o'clock. All the fast money guys are about to come on and tell you how they saw this coming, and they all made millions of dollars. So listen up when I leave at 12 o'clock to 12:30. Kidding. But anyway, there were things to see. I showed you before. You go back to the year-to-date chart. Every time we've had one of these moves lower, okay, it's been from below the 8-day. Below the 8-day. Below the 8-day. And even though this one kind of rebuilt and went again, this one actually, you know, from here rebuilt and went again. Maybe this one will too. Who knows? But again, at least if you reduce risk when some momentum said, hey, I'm a little sketchy here, and get out of the way, you didn't have to deal with a day like this. Here you have to deal with a day like that, or at least you had less on to make it more of an opportunity. Same way with this one too. You got out this day, you were able to buy this day. So, you know, you could always adjust using technicals. I read somewhere some people saying, "Oh, technicals are dead." What are you talking about? Price is king. Anyway, we'll see what happens here. There's still a lot of headline risk out there from, you know, people making fun of the coronavirus, whatever they want to do, but there is a lot of business being canceled. My best friend who was supposed to go to Italy on Thursday, he's not going to Italy because the eyeglass conference is canceled. Another one of my friends was supposed to go to Barcelona for the mobile conference, and that's canceled. So there are things being canceled. So there's a lot of business that's not happening. So what does that mean? Revenues have to come down, earnings have to get lowered, and that means PEs might have to constrict, and we've already have rates as far down as they can go. So maybe after an 11-year run, we will continue to correct a bit more than 4 or 5% off highs. So that's why you don't want to be in a rush. And we know how to take trades now. We could buy in the hole like this morning and maybe sell a bounce, or just gap up, sell a gap up to, you know, to make some, you know, there's lots of different ways to tactically make money besides sitting in 15 to 20 names like I've been doing for 4 months, trading around them, using a hedge, using options, etc. Oh, let's look at Tesla, by the way, for a second before I go. Kind of no man's land. It closed strong on Friday, but then gapped down today. It's now below the 8-day, so you have to take a little care. It tried to reclaim 832, but it's not doing anything so powerful. It's below the 8-day, above the 21-day. I think you need time. I'm in a call spread. That's all I have at this point. What's today's low? Today's low is 822. This was 832, so now this is 822. It did give you a small bounce if you were perfect, but not from a calculated area. I think give it some time. Don't overtrade this for now. I lost 35 points in that. Sold it at 866. Because I was like, so it was one of my. It looked good coming in, just in case we weren't going to have this big down day today. Still, it was above this, but I had small. Anyway, Tesla needs time. You know, it's in no man's land right here, in my humble opinion. Everything's working here. All right, so now with that said, I got to jump. It's 12:03 out Fox Business with Liz at 3:05. I'll be back here to trade the close and do my recap. I don't have much going on. I did catch a decent in the hole trade in Amazon, Microsoft, and Apple, but I'm out of those for now. I still have my little concept bios that I've been holding. Been in them since December. I have some decent prices. I'm not even going to put them up. And I'm trading around a few things. Oh, I'm in Beyond still for earnings. But it's going to be hard, you know. It's going to be hard for something that's a high valuation name to have any kind of momentum. So for me, I actually took off half of my calls today on the bounce from 110 back to 114 just to say I don't need that much equity out there. And then if it does bounce a little bit further, I'll create a different type of call spread. You know, we did well in this 3-day move actually on the VTF, and now it's still hanging in here. And we'll see earnings on Thursday if I want to keep some commitment there or some money allocated. But we'll see what type of market we have by then too. If we all of a sudden close in the lows today and gap down and these things start falling apart, it doesn't matter what the earnings are because everything will just get sold. But for now, still hanging in there, looking semi-decent. I wouldn't have the stock, but for an options play, not so bad. This is what I put on here before leaving. With that said, I wish you guys the best. Listen, guys, if you want to be involved in my community and you want to have the morning call before the market opens, which gives a lot of cash flow, great plays in areas, pre-market, you know, just try and sign up for a month. You know, if you don't like it after a month, you leave. You know, besides 14 to 20 charts that I put up there with levels, besides a recap, besides my private Twitter and tweets, besides me sometimes throwing a fish in the boat or just teaching you what I'm looking at and how I'm looking at it so you could execute on your own. T3Live.com/RAA. Sign up for a month. I don't think you'll regret it. Listen, have a good